Welcome to Chapter 8 of Government and Nonprofit Accounting. In Chapter 8, we talk about fiduciary accounts and activities. So there are multiple different kinds of fiduciary accounts that we're going to be talking about. So we have custodial funds, investment trust funds, private purpose trust funds, and pension trust funds. We're going to start by talking about custodial funds, and then as the chapter progresses, we will cover all of the fiduciary funds that a government can have. First, we have the criteria according to GASB on what determines if there is a fiduciary relationship or not. So if these criteria are met, then GASB says there is a fiduciary relationship. So assets related to the activity are controlled by the government. Assets related to the activity were not generated by the government's exchange or non-exchange revenues, and the government does not benefit from the relationship. So for example, GASB says that government control of an asset exists if the government holds the asset or has the ability to determine how the asset will be used. So if a fiduciary relationship is identified, then the activities of the fund are reported in its own statement of fiduciary net position and statement of changes. The government administering the fiduciary funds does not have any ownership interest in the fund resources. There's no revenue or expenses. They also don't get recorded in governmental activities or the general fund. So what you're going to see is that several of the fiduciary activities that we're going to be talking about are just flow through funds. So they're accounts that collect money and then distribute out to where the money actually belongs. Okay, so the first one we have is a custodial fund. So this is where the government administering the custodial fund is not involved in administrative decision making with regard to the use or distribution of fund assets. This is a type of flow through fund where everything is collected in one fund and then distributed out to the areas where it belongs. One of the examples, especially the example that we're going to be looking at through here, is a tax custodial fund example. So in the textbook example, we have a county that is collecting all of the property taxes for all property owned within the county and then distributing them to the appropriate fund or city government. So this would be so we have this example where they're collecting all the property taxes and then they distribute it out to the school, to library services, to transit, port, county operating. They would also be responsible for distributing it to each individual city government or municipal government within the county. But this is just one of those things where the county collects all of the taxes, but they don't actually have ownership or spending of them, and they just use this account for collection and distribution. So, of course, the complication with property taxes, as we've already seen in a previous chapter, is that not all property taxes are paid in the year in which they are due. Some are paid early, some late, some on time, some not at all, as we've had to calculate allowance for uncollectible taxes. We also have the rates change from year to year. So the property tax assessment and the amount that gets charged changes every year. So we have to keep track of which year we are collecting for, what the rates are for that year, what the rates are in each of the entities that we are distributing funds to, and all of this, of course, needs to be managed through our accounting records. So this next slide shows an example of all of the taxes that are collected as part of property taxes for this county that's being demonstrated. And so the county, we have anything that's in the city of Washington within city limits. So we have the total tax rate per $100 assessed valuation is $10.06. And so per $100. So if we had, a $10,000 assessed property, we would have taxes of $1,006 on that if it's within the city of Washington. And then we have what is the breakdown of that $10.06 per assessed value. So you can see that we are distributing this out in multiple ways. And we even have the state gets a penny of everything that we collect of this $10.06. Okay? Everything outside of city limits that exists in the county, so this is rural properties that are outside of the city limits. For the ease of demonstration, this particular county in the textbook only has one city within it. But you can imagine for counties like Bremer County, where Waverly sits, Black Hawk County, and other counties where they have multiple governments and then other activities that they are collecting for. And so you can see how that gets distributed out. Outside in rural areas, the assessment is $7.10 per assessed valuation. And that is just because there are extra services that are being provided within city limits that are not provided outside of city limits. Okay, so we have this example, like I said, if we had $10,000 in assessed value within the city, we would have $1,006, and then it would be broken up by this: $1 to the state, 148 to the county, 25 to the library, 7 to the township, 506 to the school, and $319 to the city. Where outside of the city, a $10,000 parcel would be have a tax requirement of $710. Then $1 of that would go to the state, 148 to the county, 25 to the library, 30 to the township, 506 to the school, and none to the city. So you can see the main difference between the property located outside the city and the property located in the city is the amount of property taxes that are distributed to the city government. So in this case, the county collects all of this and then distributes it out to the appropriate entities. So this is an example of the journal entry that we would record. So we have taxes, 2023 taxes in this example to be collected for each of the funds, where the total amount is $9,468,000, and then we have due to other funds that $1.4 million, which goes to the county fund, and then we have property tax collections for other governments. So this is the total amount that would go out to the state, the school district, the city governments within, and any other governments that we would have, which we would itemize. Okay, so in this case, now we've actually collected taxes. So we've collected 50% of the taxes levied against a parcel. If you remember from chapter 4, property taxes are due twice a year on any general property. So they are collected in March and September. So we would have the first 50% of collections here, and then how that 50% gets distributed. Um, we also have, there's a collection fee or a charge received where the county basically keeps a part of the funds as part of administrative processes to run this custodial fund and make sure that everything flows through to the correct entities. And so they are charging a cost of operating the fund. Okay, so then what we have here, we have this administrative fee that we have moved into our county funds, and then we pay out to the other governments the amount that is due to them. At the year end, we would have an entry as part of collecting property taxes, this administrative fee, and distributing property taxes. So that net position restricted is any payments that we have. We had that administrative fee, and then we had property tax collections for other governments. And you can see where we've paid some of it and then we haven't paid the other amount. Okay, this is an example of how the Washington School District would record that they had received those taxes. So then they receive cash. They have expenditures. The expenditure is that administrative fee. And so then we have their tax receivable, which is the amount of cash that they received, plus the administrative fee that they had to pay to the county for administrating that. Then you can see that what they had, so we have general funds for just the management and the running of the school, that 18 cents of this total $5.06 is to a capital projects budget, and then 38 cents is to a debt service fund. This is much like in chapter 6, where we had the bonds fund and we looked at the debt service for the street project. This is just an example of a portion of their allocated property taxes is being used for a debt service fund to manage. This is probably because of a bond issue that has been approved for the school for a variety of purpose. But this is an example of, we saw the county transactions earlier, but this is an example of what the recipient of those property taxes from the county and how they would record the receipt of those property taxes. Okay, now we have the Campbell County General Fund example. So Campbell County is the one administering this account, this flow-through tax custodial account. So they have cash that is a combination of the taxes that they have received from current taxes and the revenues from that administrative fee. And then we have a breakdown of what portion of that $1.48 per $100 of assessed property value is paying for. So we have also a capital projects fund, a general fund for county management, a debt service fund for similar to like chapter 6 and other where we're collecting money in a debt service fund, and then a welfare fund that could be, we don't have a description of what the welfare fund is, but it could be any general kind of thing. Okay, and we will continue this in the next video.